Joining us right now, Probal Sen, to talk about what he's expecting from Reliance this time around. Probal, hi, good morning. Good to have you on the show. And it seems that it's the chemicals business which is going to drive the earnings this time around. What are you penciling in from Reliance?
Yeah, I think you're absolutely right that this is a segment after a long time that the OTC segment, as it is called now, is expected to actually deliver fairly strong numbers. On a YOY basis, I think numbers still remain muted, but the way that things are going, we look at QOQ trends against 76.5 billion of EBIT. We do expect close to 87 billion, which is about a 14th QOQ improvement in the OTC segment EBIT. Across the board, I think in petchem, we have seen good price improvements across polymer and plastics. And even in refining, while we do not now have sort of an insight or we don't want to comment on GRMs, but if you look at key product spreads, particularly gasoline and diesel, I think both of them have improved by between $1 to $2 on a QOQ basis. So from that aspect, I think OTC, along with continued recovery in retail segment, should actually drive the numbers. As far as Geo is concerned, it's more of a flattish trend this time around because the subscriber levels are likely to improve a little bit, but you're also likely to see an ARPU adjustment because IUC has become zero. So you will have a 14-15 rupee optical reduction in ARPU, even though that doesn't have too much of impact on an EBITDA level. So a good quarter, I think, on an overall basis. I would expect EBITDA to sort of go up by about 8% QOQ, which is about a 6% YOY increase to about 234 billion, while profits are likely to be even sharply higher because if you remember this year, because of all the OTC bifurcation related adjustment, the actual tax burden has been fairly muted compared to last year. And that is why the profit improvement is very, very sharply higher at 40% to 148 billion, flattish on a QOQ level.
Yeah, and that's the thing, right? That much unlike the last quarter, all these fresh restrictions across the country, the mini lockdowns, curbs and curfews being put in place are going to impact the retail business this time.
Yes, so that is it. I think not going to have that much of an impact, I believe, in Q4 because I think the restrictions had just started to take place. So I would believe that the impact of the new restrictions will be felt in retail, perhaps over H1, depending on how we see this second wave going, how soon we can see, hopefully very soon, some stability in COVID-related cases, and therefore states feel comfortable enough loosening again some of the restrictions around non-essential retail supplies, whether via the e-commerce route or physically. And I think even in Geo, given that Geo phone subscribers, are a good part or an important part of Geo's overall subscription, my sense is that if your restrictions and lockdown extends beyond just a couple of months, you're again likely to see some sort of migrant exodus or a complete stop of a lot of infra and construction activity. Now, these laborers and this particular denomination of people do have a significant chunk of Geophone subscriptions. So even there, we could probably see some sort of an impact. So we are looking forward to the management's commentary on how they see the next 3 to 6 months panning out for these two segments.
Probal, I want to understand your outlook on the stock as well. It's been a little bit muted these past few months. What's the sense that you're getting post the kind of quarterly numbers? Analysts are talking a bit of a re-rating and the company being back on the trajectory for strong momentum in the stock. Is that what you're penciling into?
I think more than the Q4 numbers, my sense is that, the AGM that is coming up probably in July or August, I don't have the exact date. I think that will probably be more keenly looked forward to. In the Q4s, I think clarity will come in terms of what the final net debt or net cash number looks like after all the cash having come in. And I would expect that they would have settled whatever borrowing repayments they have to do. So we will have a picture of that. That is going to be way more important than the P&L trends, at least as far as RIL is concerned. But I think announcements of new initiatives and any progress on the Aramco deal are likely to come only by the AGM. That was my sense. I have no idea how Reliance plans to sort of communicate that. But I think that will be the key trick. As I said, over the next 3 to 6 months, temporarily, once again, you are likely to see a slowdown in earnings momentum because I think geo, retail, and even in refining products, given that there is a wave of new restrictions in both India and Japan, which are the third and fourth largest consumers of crude products. So the metrics, at least in the near term, once again start to look a little bit muted. But from Reliance's perspective, movement on downstream value unlocking via Aramco deal, as well as any other business initiatives, whether it's a smartphone launch with Google, which they have been working on, or any momentum in the fiber to home business, as and when we see reporting come through on that. I think those are likely to be triggers along with continued improvement in the balance sheet quality. So valuations as of now, frankly, are very comfortable. I think from here, there is a 10-15% return that we would expect, but investors will probably have to be patient and ride through the near-term, weakness and uncertainty until this new wave of COVID actually gets stabilized, hopefully in the next 2 to 3 months.
All right, Probal, let you go on that note. Appreciate your time. Thanks very much for assessing for us what RIL could potentially report. 2021, that's where the stock is at. Let's slip into a very short break. Come right back as we talk to the management of Persistent Systems on their steady Q4 earnings.